Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Hope you're all doing well on this Friday, July 25th, 2025. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. Thank you, Marty. It's based on structured trades that are available to everyone in the Bookmap Discord TraderLab community, as well as a library of webinars and the TraderLab community itself, which is made up of a group of like-minded traders who've come together to leverage their collective experience. This stream is about the business of trading, how the market works, why it does what it does, how at times you get in alignment with it. It's also based on helping traders not only understand the business, but to build trading plans based on structured trades. There isn't one way to trade. Anybody, of course, can do anything they want in trading. The real, quote, secret sauce, they always talk about what's the holy grail of trading, and we all know there is no holy grail, but what is there that we can have that is real versus fantasy? Reality of trading is it's a gaming process or built on probabilities. It's not built on certainty or confirmation or, all of that. It's just based on random behaviors that have a statistical edge. So we need to differentiate from the behaviors that are just noise. And even though we all have winning trades, the issue with having winning trades is if you don't have an edge, because the market is random, you're still going to have winning trades, but you're going to lose. So can we differentiate between the noise and the randomness and then also the edge? And the business of trading is about edge. So only interacting when you have an edge. And even though you do have an edge, it's no guarantee of anything because the outcome of any individual iteration or interaction with the other participants is random. It's the same as gaming. It's the way casinos operate. Casinos pay the gamblers. We have in every business overhead and cost of production. Now, emotionally, we have real obstacles to operating in a random environment. And what I have found in my experience, and I would say most other consistent, sustainable traders, is that it is edge. So managing the emotions in a random environment is a big obstacle. Edge or statistical probabilities give you the confidence to execute, even though you know the outcome of that is random. If that resonates with you, then I suggest, and you have an open invitation to the TraderLab. If you're visiting in YouTube, there's a link down in the bottom. You can visit TraderLab. There's no cost. All you need to do is confirm your Discord username, and then, of course, you'll be welcome to the community. So this is a professional community. It's for, and it doesn't matter how long you've been trading. What matters is that you actually are interested in the business versus a video game. So that's up to you, of course. So welcome to the TraderLab. Thanks for visiting today. Let's take a look at what's going to happen today. And I'm going to go over the context, in other words, the condition of the market, what the anticipated behavior is, and also the changing behaviors. And this is part of what trading is trying to classify or define conditions and also define conditional change. But we'll get into that. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. The idea of TraderLab is to help you build your business, and your business is not mine. So what does that mean? It's a function of time frames or fractals, depending how you look at this. I don't look at it as time in the developing, quote, time frame. I look at it as rotations. And if you understand market mechanics, you can get an idea of what to anticipate. You notice that I use the word anticipate, not predict. So let's take a look and let's define the condition of the market. Starting out, let's go take a look. And I have something, by the way, I have something else I got to share with you guys. Bookmap is creating some forum channels in the Bookmap server. And again, if you come to TraderLab, all this is available to you at no cost. And in these forums are going to be posts by some interesting traders. So there's a guide. Check out the forum channels. Now, this trader, he published, he's with Axia Futures. There you go. And he's just posting information, and he's a prop trader from Axia Futures. He wrote a book, and he did a webinar on it. It's in our YouTube channel and Bookmap. You can check it out. And there's going to be forums, so posts, things you can ask, questions, and there's going to be more and more of these. So if you're interested in this, it's another benefit of being in the Bookmap server. Plus, there's a lot of additional education, stocks, options, crypto, order flow with a high-tier order flow tool like Bookmap, market maker behavior, algorithmic behavior. You know, you guys all know. And it's all available, no cost. And if you're interested in any of this, it's always available to you. Just use the link in the bottom of YouTube and check it out. Also, if you're interested in TraderLab, same path. So something to take note of. By the way, as long as we're here, let me just show you something else, and then we'll get right into things, assuming I can get back to where I'm trying to go here. This is what the TraderLab community looks like, assuming I can find it. One moment. There it is. So TraderLab is a group of traders. There's a lot going on in here. Doesn't matter how long you've been trading. It's open to everyone. There's statistics, data mining, group camaraderie, and mutual support. It is a professional community. And again, it doesn't matter how long you've been trading. The idea is that we all come together and leverage our collective experience. So there's that, plus a lot of other information in here. There's also a library of webinars. If you're interested in the process I do here every day, start with the primer. It's got about 33,000 views. Meet the TraderLab. This is an advanced trader methodology, but advanced doesn't mean complicated. It just means different. And watch some of these webinars. Some of these are real-time in the sense of real-time narration, up to almost 5 hours long. I get a lot of requests, to see live trading. You can see hours and hours of this, and they're in the this library of webinars. Plus, there's a lot more. And the other part is Stop Gambling and Start Winning. Read that one. And Trapped in Trader Groundhog Day. Watch them. There's also a document section, structured trades that I share, opening context alignment, statistics, a glossary, and a lot more, psychological aspects, mental obstacles. It goes on and on. Anyway, it's all available to you, and feel free, as they say, and there is no cost. Use that link in the bottom of YouTube. So there you go. Okay. Now, let's talk about the condition of the market. This is the RTH Open. We are opening RTH Open. This is called the naked volume pointer control. And what this is the highest volume from yesterday's RTH. When you open in the fair area, now there's another piece, something called value area high, value area low. And when you open here, you're in what's considered a fair area. So when we open in range, in value, it is saying basically nothing has really changed. So how do you trade this thing? Well, let's go to our grid sheet. Our grid sheet is something I've shared in TraderLab, and it's really based on when I build trading systems. Conditional behaviors kind of take you down think of it like a schematic, down a track of certain things you can anticipate, not predict, anticipate. And it's based on the condition of the market. And since we're in balance, we're opening in range in value. What does that tell us? The market is in balance. Now, what is balance? Using a definition, balance means we're going to rotate around and potentially around an accepted price. So two-sided trade. So the first thing coming in is two-sided trade. So right away, if the market opens and think of this like a fair price. This is like going to your store, and it's retail, high volume. You buy your can of tuna, it's $1. Every sellers are willing to sell tuna for $1. You buy it, high volume. Just like when you shop. Trading is shopping. Hope you might not have thought that. So what makes it so difficult? Randomness, and it rotates. So it's fractals. So, but starting out fair. And the idea, you've heard this thing, buy low, sell high. Well, in our business, it's sell high, also buy low. So if you're looking for longs, you want to get outside to come in. If you're looking for shorts, you want to get outside to come in. So right now, let's define it a little further. So what do we anticipate? If the market opens in range and value, the market is in balance. Likely, we're going to get a neutral or a low conviction day. Now, a neutral day is a market profile term. And what it represents is coming out the first hour's high and then reverting back in to wherever developing volume point of control is. And we'll talk about that. This is the naked volume point of control. This is where we closed with the highest volume yesterday. A reversion trade would come back to a developing volume point of control. So the current auction is trying to figure out where's this retail price. Well, when we start out, we're opening at the retail price. And then as the market auctions, it's going to develop. So it's going to move around. So initially it's open here and we're looking for a potential neutral day. That means come out the top, first hour's high, fall back inside, come out the bottom. And being it's Friday, and I posted this on TraderLab, but this is not an easy day to trade. Not that any day is easy because it's two-sided trade. But your plan, if you're in TraderLab, would be suggesting two-sided trade. So then you have to try to dance with the market or get in alignment with it. So likely a neutral or a low conviction day. Basically, the market sentiment has not changed. And what you're trying to do is trade outside back to here, outside back to here. That's the initial thing. Now, being it's Friday, my initial plan was only shorts going for the yesterday's low. Why? The market is long. And if you remember last Friday, what did the market do? It took out weak longs. What might we get today? Same. You want to go home long over the weekend if you had a nice run? How are you going to trade this? How might other traders trade it? This is part of understanding market mechanics, but also retail trader behavior. Write this down if you haven't heard this before. Think like a retail trader. Don't act like one. So part of trading is not only the technical aspects of it, but also understanding human nature and retail trader behavior. So if we understand retail trader behavior, we know there's a possibility that we're going to take out this low. We also know that longs that come in today, which is fine, are also going to put stops under yesterday's low. If I understand that there's longs now in the market, which because of some news, and we'll talk about that now there's stops under the current low of the day, which I think might be over here, I don't know. And then we have probabilities of taking out either the ETH high or low. Let me write this down. We opened, you write it down, sorry. We opened higher in range. So there is a 97% probability we either take out the ETH high or low. ETH low. ETH high. Hold on one second. Okay. And this is the ETH all-time high. So we have resistance up here. This is the current high of day, by the way. And we have our value area high, our value area low. If we come out of value, it might mean that we're going to explore. But if we can't get further, well, if we fall back in, then we can fall out the bottom. Just part of the nature of the beast. So overnight volume point of control, about an 81% probability. If we fall back inside, we come back here. It's a two-sided day is what I'm anticipating. Remember, my lean is short. Doesn't mean anything. You know, it's just random. Let's see if I got something else. The statistics favor the upside. The condition of the market favors the downside. How do you resolve this? Well, you try to align And then basically it's trade management, trade plan, and what is it? Random. So let's take a look. Now, up here, this is the ETH. So before we even open, I've got to take a look. What happened up here in the ETH? Well, right here, hold on, I got to look, 17. So 18, it was 18. I'm going to put this in here. 18, and I'll just show you these little things here so you can see this. There's, in this is an auction. So too low, too high, too low. And the high price or the retail price is here. This is an auction. In other words, oh, it's on sale. I'm not paying that. And then the high volume basically is 18. So basically it's right here. It's like a little auction. So going down in fractals in the ETH, this was too high. Now, this is the ETH high, and we might come up here. There's a high probability, right? So this is just what you got. So lay of the land. 1 second, I got to turn some levels off here. I'm turning off where you see those HVNs and all that. That's the current market. So I've got to turn them off so we're not confusing ourselves. One moment. If you have questions, please post them. I can't see them right now, but I will come up for oxygen. So let's start. So my plan starting out was, I know this might be too high. I know the high volume was here and we're below this. I know this has a high probability. I know there's stops here. I know I have a high probability of either ETH high or low, and I don't know. So not my job to know. Can't know, so I don't know. So let's look at this. Liquidity comes into the book. I've got my RTH open. And here's another thing. Now, in the idea of a trade plan is to already know, based on the research you've done and also the TraderLab methodology, which is auction based, is what might happen. Nobody predicts anything, so let's forget about it. What we need to do is understand possibilities, probabilities, and we can discern a lot from the condition of the market. The condition of the market is right now balance. So two-sided trade. So the first piece is potential for two-sided trade. What does that tell us about where we trade? You don't trade here because this is again, the retail price. Don't we like to sell high? And don't we like to buy low? So think of this like shopping. If the price gets too high and this is the fair price in this distribution or store, let me get it there. Okay, and this is the outside edge, and this is the outside edge. That's a fair price. I'm not trading here. I needed to come outside to come back here. I'm not paying that, and it comes back to retail. Or, oh, it's on sale. Throw 3 in the shopping cart. Back to retail. So that's called mean reversion, and it's rotational trading, specific plan. So now, and here's the other part. You need extreme patience, because what's going to typically happen, and I'm using the term typically, not will happen, might happen, is you're going to slosh back and forth. So early sellers will get picked off. Then the buyers who are chasing it get picked off. So it's rotations. So when it's short-term rotations, me, not so much. But my plan for today is to get short at this time. Now that will change if it changes, but it hasn't. So let's look. Is everybody tracking? It's very important. And the thing about TraderLab is you have a plan. And what the idea of the plan is to guide you. The other part of the thing is it's conditionally based. So the current condition is balance. The only way to trade balance, at least for me, and I'm only talking about me, not you, is what's called reversion, mean reversion, so outside in. Because if it opens at a fair price, I'm not trying to buy or sell it here. This is the fair price. I want to sell too high and I want to buy too low. Does that make sense? Are you guys with me? So based on this condition, I have to let it rotate. And this is hard. What's hard about mean reversion, and the joke in TraderLab is mean. What's mean? Well, what's mean is that where's the outside edge? And that's where and I think most other traders who trade reversion, and by the way, reversion is the most common condition, rotational trading. Now, when we break out of this two-sided trade, then we can get directional, and then we can start auctioning another area, like pause and then rotate. And then either we continue or we fall back in. Just the nature of how the beast works. So let's look. So this is our RTH open, and we come down. So if you're an aggressive trader and you sell this, what is this going to do for you? Get you stopped out. And let's say, so what happens is, in balance, if you're a breakout or a momentum trader, you're going to have, I think, most of the time, a problem. Because all it's going to do is we're going to get shorts, buy stops are here. It's going to get the buy stops out. And if I run out of buyers, then I can rotate down and get these guys out. So I can get shorts here, buy stops. Then the longs are here. Their stops are under here. See, this kind of thing. So this is not where you trade. What you would be doing with this is using locations to try to get positioned. And then again, where's the outside? Is it there? Well, let's see. Maybe it is. So here you have it. Look, you'd be ripped. You'd be ripped. You get here, you think you're going to zero, ETH low, settlement, liquidity in the book, absorption here, no way to know. Come out here, take these guys, going to the moon, everybody gets long. What happens to them? See what I'm saying? So this is difficult, nasty, and, nasty. So it's very easy. Like, try to sell this, and let's say you try to sell it here, right here. You take a stop. You come down here. Why isn't it going down here? Well, who knows? Come back up here. Too high. Where is our support? Now I'm going to show you something a little different. This is called the variable high volume node. And what it's telling us, and again, you're in balance, so I consider this a very advanced and difficult environment to operate in. Me and everybody else. Part of it has to do with range. So this is what I know. I know this is my retail price. If I get more volume up here, it might be saying this S&P at this price is too low. So I get VPOC migration and I break below this. It's not making sense here, okay? But I find my buyers. So I have absorption here. You only know in hindsight. But what do I know about this? There are buyers here. So the red bubble is delta or aggressors. That's market orders and stops, which become market orders. That's sell stops. Now I come down again, and as far as I know, just going to keep going, right? More stops, buying iceberg, and a sweep. The sweep is kind of a early warning, thing that maybe we're going to get a counter rotation. Now, the word maybe is always part of trading. I'm under this, and as far as I know at the moment, I'm headed towards this. I get the sweep, which says potential for counter rotation. Now, the thing with anything in trading is it's only maybe. So I see this and I come across. When I come across, my last sellers were here. And you can see this high volume structure. If you were trading mean reversion, which is what I was doing this morning, you'd be selling this. Now, there's a little problem. It's called range. So if you got short here, you got to scale here. Trade doesn't qualify. And then the next support would be here. I mean, look at this, right? So I find this nerve-wracking and difficult. So this is a difficult trade. See it? So liquidity here. So this is hard. Let me show you another short. So basically, if you're taking these trades, you have to know you're in a difficult condition because of chop, and it's not higher time frame traders. It is us. It's the little ones, the small fry. Nobody's really, the market's not directional, it's rotational. So as long as it's rotational, it's reversion. So it's outside in. And the problem with the reversion is, where's the outside? You know, was it there? Is it here? Is it there? And then the stops are always going to be over these swings. You come up, you see the buy stops. This is where it was too high. The sellers, you see the icebergs, absorb the buyers. The liquidity is in the book. You would be looking for a trigger, and all you got is this. And then if you come across, you're looking to take the stops out. For me, I'm still, well, was trading for this. Just saying. Take this out. Remember, you got to scale there. Come out here into the liquidity, break, buyers, still reversion, back to there. And it'll drive you nuts. And there you go. Where do we get? We come down here where the buyers were. And this is your initial balance low. So for me, all this is, and I'm on the short side only because Friday, and I posted before the RTH opened, based on the condition of the market, that I was looking for what's called responsive selling. In other words, if we get an upside rotation, profit taking, those are responders. Are you going to go home long over the weekend? Oh, I don't know. Most retail traders won't. They'll take profits because of the weekend geopolitical risk, tweets, whatever. It's all risk, always. So your day trader, probably not going to hold. So that's my plan for the day at this stage. So sellers, reversion, outside. Trying to get down here, I have over a 90% probability, almost 98% probability of taking out either the ETH high or low. Pick one. An 82% probability of taking out the previous high or low. Pick one, right? And what's under yesterday's low? Stops. So this is what I'm trading towards. Okay, that's me. Not saying it's a good idea, it's saying it's the one I have. So that's my plan. Now, so 9 a.m., and notice what we're doing. We're doing this. So everybody's getting collectively abused. Stops are here. Icebergs are buying the outside edges. You'll see the icebergs are selling the outside edges. So everybody, the little guys, are getting abused. Now, we have news. This changed everything. So for me, it was shorts, only shorts until this. This is news that the EU anticipates having a trade deal over the weekend. When you get news, the market is disrupted and it has to evaluate the new input and auction it. So when this happened at 9:30 my time, Central Time, we have something called the IB, the initial balance, first hour's high or low. Now let's look at the statistics on this. So there is over 98% probability we take out either the first hour's high or low. And my plan was looking for to come out the bottom. But when you get the news, it's like, now change. If I have change, now I have a structured trade in the TraderLab, and I can turn the barge around. And I don't know, So now it's changed. I'm outside of value. And when I'm in value, it's slosh times to see how it's slosh. So at the time, this is, that's the current condition. The condition changed and it was news based. So when the conditions changed, I now have a structured trade. And I'm going to show it to you. And it's called the IB continuation trade. Let me show it to you. And these are all in TraderLab. Now you'll notice I broke to the high side, so I'm now out of balance. I'm above the yesterday's value area high. Value area high is where 70% of yesterday's volume, it's considered the fair area. And don't forget, that's retail. So the idea of the reversion trading is to come inside. And if the market's long, fall out the bottom. News, change. What does it do? Takes the shorts, throws them on under the steamroller. I get a buy sweep. Now let's take a look at this a little further. So I have resting liquidity here. I see my sellers. Right here becomes resistance. I have the IB stat at 930, which is this. I take it out. That's called range extension. Now I am off the shorts at this time, and I'm looking for long continuation trade. Let me show it to you. So IB, break high, sweep. That's potentially counter rotation. Sweep into location. Now, when this happened, we broke out of balance, which is what this thing is. Too high, too low, too high, too low, and then all of a sudden change. Now we have whatever, too low, whatever, too low. This is the high. I pull back, and I have a structured trade called the IB continuation trade. I come into this liquidity, and I had my sweep. I pull back, and I get a sweep. A sell sweep often means that we're going to come back the other way. Notice the sweep. This is one of the beauties of having an order flow tool. When I see a sweep, if I don't get buying above it, I can counter rotate. When I get the opposite, I can counter rotate. I have a structured trade right here at this location called the IB continuation trade. It's in the 60 PDF. So if I sweep, I can get long right here. And then I have to get risk neutral and then put a helmet on. Let's watch. So what do I know? Outside edge. It's right here. So let's think about this for a moment. What you're seeing, because I know you're looking at this, and if you're not familiar with auction market theory, how to use the profile, what is this thing all about? Why is a profile? What is this thing? All the profile is giving us information. It's not an indicator per se. It doesn't tell you what to do. It lets us see where price is. And if price changes, and now I have a new auction up here, too low, too high, and this is the retail price or high volume. The shoppers now are up here. I'm not paying that. Yeah, but it's on sale. Structured trade. What's this? Same. So this is now the sale price. This is the retail price in here, and then this is too high, and I got my liquidity. So no clue. So let's watch. So this is a long, you'd be risk neutral. This is a long, your resistance is right there. How do I know it's resistance? Because in the micro structure, my sellers are here, my buyers are there, 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 there. My sellers take over there. Break, that's a trigger. Now, in the micro structure, and you're not going to know this until after the fact, this is now resistance. Why? It acts like a VPOC. It's the shopping. High volume is there, and if I won't pay it in your convenience store, I get in a car and I leave the store. But you like to shop here. So what we do then is we are going to put a little box around this. We're going to bracket it in because it's the language. Let's remember, this is language. I don't use indicators. I had to learn to speak a foreign language, and yes, it's foreign. So this is where the volume is, and it's matched up with that little node right there. That little node, just to make you a little crazy, is the same as this. This is the highest volume from yesterday, okay? It's the retail price from yesterday. In a fractal, Remember, Matryoshka dolls, Russian dolls, no time frames for me. This is an auction, too high, too low, retail. And if it's too expensive, the shoppers leave the store and they get in a car. But you like to shop there. So you come back and check. Is this really too high? Is that too high? Break away again. That's a short. This is a short, and we'll see. Now, counter trend though. So let's just see how it works. Too high. Now, when I say it's a short, I should say it's resistance, not that it's a short. But look at the behavior. See? So if you can read this thing, you have choices, naturally. You could do anything, of course. But this is a structured long. Your resistance is here. And you don't know this is your resistance. It could have been here, but we broke high. What about here? We didn't break high, we broke low. So right here is resistance. So here's your choices if you're in TraderLab. If you got long here and you get this, you have a trigger. You can exit the trade here, or, and this is where it gets, it's up to you, or you are holding for statistical probabilities, which is over an 82% probability to check yesterday's high or low. And we could do either, we could do both, and the ETH high. Over 98% probability to check either ETH high or low. I'm still looking for this, but not at the moment because the context changed on the news. But I have to get through here now to get to these other targets. Nobody knows. So let's look. Resistance. See the resistance? So if you're in TraderLab, I always suggest, I do this for myself because once this is off the screen, what is the old saying? Out of sight, out of mind. Now this is called VWAP migration. Let's look at the language in fractals, not time frames, fractal. The difference is the time frame is clock. What this says is this is the new retail price. In the microstructure, this is the retail price. It's resistance. When this shifts higher, and I've done a webinar on this, it's called VWAP migration. What is it? Let's look at the language. Retail price. Change of context, longs, resistance, retail price, shift high. What does that say? If you want to buy an S&P right now, this is the price. Microstructure, resistance. Get above here. What's our targets? Yesterday's high, ETH high, helmet. That's it. Now it's trade management. So where does this trade fail? Outside of the low volume node. So you had a potential long here, 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 and then your resistance is there. So if you're these are structured trades. So if you're taking these, there, resistance. So long scale, because we know we found our sellers. If you get long here, scale, because we know that's too high. Migration, higher time frame, which means for the whole day, fractals, this is now the retail price. This is too low. Now we can come back later. It can all change. Part of the thrill. This is called, now we have what's called two distributions. All of a distribution is I'm not paying that. Yeah, but it's on sale. Retail. If I leave this and I start a new distribution, it's an auction. Now what was too high becomes too low, and it's aligned with a structured location or a structured trade in TraderLab, which is right here. So this is a long, and now you're going to try to go to your statistics, and then whatever happens, happens. And you have to have a trade management process. Is everybody tracking? So this is TraderLab. This is not complicated. You know what it is? Random. Other than that, piece of cake. How you guys? How we doing? Please give a like if you're visiting in YouTube. You know, the thing about this is there's not a lot of trades. The idea of trading is, I find, is not to be active. It's to be patient and then try to get in alignment. We all take stops. We all, get abused. Just part of the joy. Now, 18, remember, is an important level. So on a long, which is from here or previous, scaling over here, this is the next target in front of this, not a recommendation. And then, the Hail Mary pass, Are you guys tracking? Kiloton, the thing about the buyers is the news input changed the auction. So for me, I was on the shorts. Now it's longs. That's all there is to this. It changes. You have to define change. And now you have to look up the financial food chain and look at your statistics, which suggest yesterday's high or low. And we can still take out the low of the day. Doesn't matter. We're not trading that. Right now, we're trading the current condition of the market. We also know if we come back in here and we completely fall out of this, we can come down. But at the moment, there's no shorts. So you just have to do your thing. We have to always define where does it change. So anyway, this is our next target here. For me, this is my scale. And then the other one is ETH high or trailing stop. And none of these are recommendations. I got to move my orders around a little bit here. So this is from the ETH. So that's why this is sitting here. And the ETH high was here, but in the ETH we had an auction, and this was the high volume node. This was too high. So this is very important right here. So let's see what we're getting. Sweep, we have to look for counter rotation. Not a recommendation. So now we're going to look at the liquidity and we're going to watch. We have a 98% probability of taking out either the ETH high or low. I don't know about you. If I can clear this, then this. If not, then potentially to come back here. So we'll see. Right now, though, the fair price is above the IB, the initial balance, first hour. It's above the LVN, and it's above value. We're out of value, and we're about to get out of range, maybe. Yesterday's range. All I have right now is long until it changes. How we doing so far? How you guys doing in YouTube? You guys okay on this Friday? Hope you're getting something from this. If you're interested in TraderLab, there's a link in the bottom of YouTube. There's a library of webinars. The TraderLab community. This is an advanced trading process, but don't confuse advanced with complicated. What it is the trading process is not complicated. You can simplify it. You don't need a lot. What you need to understand is you're operating in randomness, and psychologically, you're always going to be triggered. This was the target for my scale, and now it's helmet. So the long was here, this area, for me, up to here, because when you approach a previous day's high or low, you're going to get profit taking often. So I know this was too high in the ETH. That's why right here was my scale. And these aren't recommendations. Now, don't forget, we're in a bullish configuration at the moment. So this is the next thing. But if I test this and I don't go anywhere and I break under here, and we're just going to watch it, I can come back here. Just saying, in there. So we'll see what it does. Now let's look at microstructure. Notice what we have: too low, too high, too low, retail. If I break away, what am I creating? Too high, too low, too high, too low, retail. Microstructures. This is what fractals are. So what I'm doing is I'm attempting in multiple time frames to read the behavior of the participants. Since I don't use indicators, this is my indicator. There's a seller here. That was absorption. There's buyers here. The red bubbles with the icebergs, they are buying. So if depending on what happens right here, are the buyers that are here and here, if I dip here, are the buyers going to go, oh, really? You're going to sell me my tuna on sale? And they consume the sellers, the aggressive side, which might be stops, and then do these icebergs absorb the sell stops, and then we keep going. If I don't in the microstructure, then that, which was my target, who knows, and the high volume node is too high. You see? And you guys know these levels are on the chart. Now, what do I do about this? Well, I have choices. If I come back here, I got to get over this to continue. If I can't get over this, then there's a possibility to come back here if I fall out of here. So it's if this, and I clear it, then that. If not, if that's too high, then what? Then back here. We'll see. So how do you deal with this? Great question. I ask myself that also. If it's random, I don't know what it'll do or where it'll do it. I do know levels where I might see behavior. Now, what has to happen here is this too high? Let me put a little box around it. Now, I can't tell you what it is. I can tell you what it might be. It might be too high. There. And where's my micro high volume? There. So this is resistance right in here. Let's see what it does. Now, it can just motorboat through, or if I can't get above all this, this is my resistance. Let's just watch the behavior. Now, remember, statistically, I have a 98% probability of taking ETH high or low, and it could be either of them. But at the moment, the context is up. So we just have to watch. This is not a short for me. It is right here, I have to watch it. If I can't clear this, then, and if I break down here, then I would consider, for my plan, managing the trade. And if my plan says you just ride this, into the sunset, then my stop would be further away. It's all a function of your individual plan. Buyers are here, sellers are here. This is my microstructure. I'm not paying that. That's up there. Oh, it's on sale. Retail. Is this price now too high? Let's watch the behavior. I don't know the answer. I know how to ask the question. And I know what I will do based on my plan, depending on the behavior here. So let's watch it together. This is trading the auction, not predicting anything. What I know is the context is up. And what I know is this was an important level, and obviously RTH high, which we took. We have an 82% probability-ish. Past performance, not indicative of results. You got to vet this for yourself. Let me just find this. 82% probability to take out the previous high or low. And to take out the previous high, 58% probability. To take out the first hour's high, 66% probability. So you can kind of see the statistics are leaning north. But you never know where the high of anything is, right? So this is resistance. Let's see what it does. We want to watch the liquidity. Do these guys pull? They do. It opens the door. If we see more liquidity come in and this pulls here, it can open the hatch. So we got the door up here. We got the hatch down here. Let's see what it does. You see how we're pausing here? This is an auction. I'm not paying that. retail, resistance. This is like your over-under right here. So we'll watch it. Are you guys tracking? Is this making some sense? Mr. Mind in YouTube. All of this is available in the TraderLab community. Data mining, research. I've shared 60 PDFs of structured trades that are available to all of you. Library of webinars. This is one way to slice and dice the market. I hope you can kind of see what I'm doing. And by the way, there's no plug and play. What traders do in TraderLab is my objective with creating the TraderLab was to share my 46 years of experience. And I spent too many of those years trying to create certainty and confirmation. And it took me a while before the light bulb went off that there is none of that. So if we don't have certainty and confirmation, then what do we have? We have behavior. And if we can define behavior, and behavior for me is not some spaghetti crossing over someplace. That isn't doing it for me. What is doing it for me is understanding the condition of the market and where the obstacles might be to behavior. And then I have a plan that I already know what I will do. I don't know what the market will do. So my job is not to know what the market will do. My job is to define the condition of the market, have trades that I've vetted that have an edge in that condition, and then take those trades. Win, lose, draw, or whatever happens, happens. Right now, the condition is up. Right now, the resistance is here. I have this high probability, and now I have this. So this is my potential targeting. My choice based on a plan would be right here to be out of the long, and I would be okay. The long was from where? Wasn't it? Where was it? It was down out here. So this is where the long was. So if I was done with the trade here, that's fine. Now for me, not a recommendation. This was a scale. And that's because of that. And this, because of the probabilities. So once I understand the probabilities, now it's either the bonus round or this is too high and I'll get taken out, subject to my plan. Anyway, I hope that makes some sense. You guys have questions, post them. I'll do my best. And if I can't get to your question, if you're visiting in YouTube, you can always use the link in the bottom of YouTube to visit the TraderLab community. All you got to do is verify your Discord username, and that's it. There's no cost. Okay, let's see what happens here. Next target is here. Moment. Okay, we want to watch this. Profit taking ahead of ETH high into this liquidity. So we want to watch here. This is important. Be very nice if we can break high and hold this high volume that's coming in here. This was buyers were here, sellers are there, liquidity. So we got to watch this. If we can push off here, we get there. We don't push. We fall under here, we can rotate. That's what I know. Let's look at the distributions. Too low, too high, too low, too high, retail. Break away from it, too high, too low, too high, too low, retail, right there. So this is my retail price now. Next target is here. Now you want to watch this. Support now is here. It's a target. Now, if we get above there, then you're looking at this. I mean, this is just, this is what it is. So trade management, fact, not a recommendation, but this is important. Most of this is one player. That's what's showing me in the limit order book over here. And we have our resting liquidity. This is the heat map. It's showing me I got 165 sitting over here. Anything can happen up here. It can get front run. It could get pulled, and we could just blow through it and keep going. Let's see what else is up the financial food chain. Right now, that is where the liquidity is. So that's a potential target. It's a strike price. So now, again, what are your choices? Now, where's our last long structured trade, right? It's the IB. Here. So this is the last long in the TraderLab. It's wherever it was. So long, this is a long, this is a long. So these are the longs. Now, up to you if you want to take if you have other structured trades. So this says the retail price now, the new retail price developing time frame. This was our resistance. You can see it. Pullback. There's our sweep, sets up a long. There's your pullback, sets up a long. Migration, resistance, break high, new distribution, rotational trading. This is reversion in fractals. Doesn't mean you do anything with it at all. It's just something you can narrate. Next target is here, and then 25. We're just about there. Hold on, I gotta pay attention over on my trading platform. So that's basically TraderLab process. Does trading have to be complicated? Absolutely not. But what it is that is very difficult for us is it's random. So right now, if you're looking at this thing, hold on a second. Oh, I did get filled. Look at that. Son of a gun. Lucky, lucky, lucky. What I do is I'll look at this, and this is not a recommendation, and I give it a couple ticks. So I'm out of my long. That's it. Not a recommendation, because if you have more runners, why not? Just keep going, right? But that's okay. Getting long from wherever the heck it was, down here someplace, up to there, that's okay. I'm good with that. So, that's kind of it, Questions, guys? And thanks for your patience. And by the way, the market going up here is as much a surprise to me. I don't know if it's a surprise to you, but it is to me, because that wasn't my plan for today. The green and red mean these are delta bubbles. All it shows me is aggressors. Aggressors are made up of initiators and stops, market orders. So what I see here is my sellers, aggressors. 46 sell stops come out. But why didn't the market go down? Because there's absorption here. You see this liquidity? These are buyers in here. Now, I don't know until I'm above them that was a buyer. Because why wouldn't I just look at it up here? Buyers are here, sellers are here. Why didn't it go down? Because there's a buyer there. Buyers are above the seller. Going to the moon. What's sitting over here? Sellers. Do I know that? No, not until I'm below the buyers. Now I have a trigger. And again, I'm in microstructure. This little node coming out here, this is the volume in here. And let's look at the concept. Too high, too low, retail. If this is too high, I can leave it. So I can use this to manage my trade. I know I have sellers there. There's the icebergs. I have liquidity here. And my target was this. So for me, I don't put it there. I give it a couple ticks and let it go at that. Just doesn't matter to me. I've been left at the altar too many times. unable because me and the rest of the planet have my limit or my exit at the same place. So I'm okay. And if it keeps going up from here, I've already accomplished my trade. And that's not a recommendation because my trades are based on the number of contracts I trade. So I tend to take my my scales or profits at fixed targets. That's just me. That have probability. You know, this has probability. Not statistical, but just behavioral. Does that make sense? Oh, Brian, I'm glad it's helping you. Brian, come to TraderLab if you really want to up your game. I believe anyone who comes to TraderLab might be able to change their outcome and create sustainability in this business. Um, but there's a lot of work to be done because this isn't do what I do. It's learn concepts and understand market mechanics. Then, because we all find our psychology, you know, what aligns. Um, some traders are going to put this trade on and get in a Barca lounger or take a nap. Other traders are going to be very active in here, you know, and just go. I go for targets primarily or trailing stop. So I have a couple ways to do it. I trade statistically because I found over time that statistics, the word certainty doesn't exist, but I find that they're tangible. This is the target, by the way, not statistically, order flow. And if we get above here and check it, it becomes potential support or an ad or something. I'm not going to really go into that, but I'm just going to say, as in TraderLab, I've shared 60 PDFs of these structured trades. Now, you can't learn how to trade off of this. But when I put these together, I'm not a vendor. There's no specific trading course. Traders were asking me, what are you doing? So I said, well, let me show you. And some of these are actual trades I took, you know, like this. And others are just, you know, screenshots. Some of the research, I was working with Bookmap developers, and this is like 2020, you know. So I was just sharing this stuff. These are actual trades. You can see them. So, and there's many pieces combined here. What I always suggest in TraderLab is you isolate specific conditions and then you design solutions for what's called context. In the morning, the context was rotational. You know, I was trading mean reversion shorts, looking for the bottom to come out. News comes out, changes the condition. Now that plan goes, you know, in the drawer, and a different plan comes out, which is my breaking out of balance into a directional context. Now it's one side only, longs. So instead of long short, rotational trading, reversion trading, this is now directional trading. It's different. So there isn't a one size fits all. Early on in my development, you know, I kind of thought, you know, one size would fit all, and every time something showed up, I'd do the same thing. Well, the problem is the market is not in the same condition all the time. It changes during the day. So in TraderLab, what I've attempted to do is share ways to define the condition. It's always, not right now, what is the condition? Are we going to go higher, or have we found our high of day? I don't know the answer. Here's what I know. I know my high volume now is there and there. And if I can't get above this, then the longs in here can get thrown under the bus. I know that. I don't know if they will. So I need to watch. Where's my buyers? Here, here, and where's my stops? There, there. So let's see what it does. Microstructure outside edges over here. What was too low? This one down here. I'm just going to mark these. We'll see. You know, this is part of the thrill. Who knows? I'm out of my trade, but that doesn't mean we won't just pull back, and why wouldn't we keep going? Well, this is it for me. And that's not a recommendation. Just like everybody else, I can leave 20, 40 points on the table. And then looking in hindsight, of course, I'll have regret because you don't know until hindsight. So what do you do when you're in a random environment? You have to define what you're going to do before you even start trading. So in the TraderLab, it's about a trade plan. We're not making it up. The market's random. Why would I want to be random? The only way I can extract this statistical edge is not being random. The market is random. Do you think having random inputs in a random environment gives you an edge? What it gives you is you're gambling. And that's okay, but I don't think you're going to derive sustainability playing a video game and gambling with random inputs. What I did is early on in my career, I went to the other extreme. I had everything but the kitchen sink, and I built trading systems and optimized them. I thought, well, there it is. I'll use all this stuff, and somehow the computer will sort it out. Well, that didn't work because I had to always go back and do optimization. I had it on a schedule. Well, I was doing the same thing with my systems as I did individually early on when I was using just indicators by them, isolated. So, and I was a swing trader, trend follower, not a day trader. Didn't exist when I started in 1980. Not really. There was no technology for it. So, as things evolved over the years, I got more indicators and, discovered oscillators and thought, boy, that's great. But no, same problems. So I had to kind of reverse engineer everything and rip everything apart and put it back together again because I was missing something. I was trying to fit the market into a box. In other words, it'll always do this, it'll always do that. Well, no, it doesn't work that way. The market will do one thing and then it changes. If it changes, you can't apply the same process to a different condition. It's a conditional process. And then when you recognize or define a condition, then you have certain trades that fit into that condition. When the condition changes, those same trades are no longer qualified, and then different trades are qualified for the developing or different condition. So the condition was rotational trade until we broke out on the news, then the condition changed, and then it's directional trades. You see? Now, if this changes again, which it hasn't yet, then it'll change back, and then it might be shorts, but that'll be counter trend trading, you see? So it's always in flux. So the idea is to try to get an alignment, underline the word try, and then define conditions and then extract metrics so you know where your statistical edge is, not what will happen on the next individual iteration of a trade. It's what happens over a large sample size. Remember how casinos work. They play the games exactly the same way, and they extract the dollars from the gamblers over time, even though they pay the gamblers. So that's why we take losing trades. An edge doesn't mean, that the next trade will be a winner. The next 4 trades could be losers, and then the next 4 trades could be winners. That's a random distribution. So if you have statistics, you're no longer bound as much by your fear and greed, because then you can open your trade plan, which is what I work on with our traders in TraderLab, to know where your trades are, what your edge is. And having a statistical probability or edge gives you control over the lunatic under the hood, fight and flight, FOMO, all that, And giving you control doesn't mean you always have control. It means that you have more control and you can calm yourself by knowing that even though you can take a stop at any time for any reason, of course, that over time, if you have the discipline, you can extract an edge, same as the casinos. That's the business of trading. If that resonates with you, then come to TraderLab and you can use that link in the bottom of YouTube. That's your doorway to the TraderLab. Hope you're getting something out of this. Brian, thanks for visiting the TraderLab and thanks for joining the TraderLab community. There's a lot of information in there. In fact, one of our participants, Greenie, thanks Greenie, built something I've been talking about here for a number of years, something I built for myself many years ago called the error cost calculator. Most of us, when we make errors, notice the behavior, you see, if we're diligent, we make a note in our journal, we turn the page, we never look at it again. That's what I used to do. because I thought, well, I'm supposed to keep notes. And then on to the next trade. Well, one day I kind of thought about, gee, I'm looking through my notes, my journal. I'm seeing error this, skip the trade, move the stop, bail that, all that. Everything you do, me. I'm the same as you. Just been doing it longer. That's all. So, and this might have been in the late 90s or early 2000. I can't, I don't remember anymore. And I said, well, I'm going to keep track of this. So I created something called the error cost calculator, and it was very rudimentary. So just like you guys maybe keep track of setups, as you call them, I kept track of errors. So errors, what are the errors? Skipping a trade, moving a stop, bailing out, who knows? FOMO in, all that, FOMO out, whatever they are, I quantified them and I put a dollar amount. And I added it up. And I found, let's just say over a period of, I'm just going to give you a number. Let's say over a week, I threw $1,000 out the window through errors. Over a month, $10,000 out the window. And then I was shocked that it was that much. And I also classified it by type of error so I could see what my common errors were. And I started even going into what were the conditions, like what was going on, getting, myopic is an error, can't go up any higher. It's got to go down. Well, the market's going up. Am I going to keep fading it and taking stops? No, I can't sell it. I can only do trade management now. But back in the old days, I'd go, oh, that's it. I'm going to sell this. Why? It might be the high of the day. And then again, the context is up. How can I get short? I might take a profit if that's my plan, which it is, by the way. But that doesn't mean we won't go up another 20 points, right? So all I can do in this condition is follow my plan. That's how I rate myself. How do I grade myself? I can't grade myself in the randomness of a market. I need to grade myself in how I adhere to my plan. I can always change my plan, but if I don't have the discipline to execute it, win, lose, or draw, I'm on my way out of the business. Error cost calculator. Greeny, thanks again. And guys, if you're in TraderLab, be sure to thank Greeny. And, I suggest you download that error cost calculator, as well as all the statistics that have been created through the data mining and the efforts of everybody in the community on probabilities, because this is a business of probabilities, not predictability. And our psychological drive, of course, is to look for certainty to avoid risk. And the psychological aspects of this business are really based in our primal wiring. The need to be right, approval, to be able to tell ourselves and our friends and our family how smart we are. Oh, you're a trader, you must be smart. No, it doesn't take intelligence to succeed in this business. It actually takes discipline and doing the work to know where your trades are and not to make it up. A lot of you probably grew up playing video games, and you bring that here. This is not a video game. This is really a game, if you will, of edge. Casinos operate in this environment. They don't control the cards coming out of the deck. They don't control how gamblers play the cards. They do control how they play their games. So they only play the games with an edge, and they play them exactly the same way, even though they pay the gamblers. If we take a stop, how does that impact you on the next trade? Let's think about this for a moment. You take a stop. How about this? You take 2 stops. You're frustrated. You're angry. And now maybe you impulse in on the next one, or you skip the next one, or you're making it up and now you say, I'm not going to take another loss. You quickly move your stop to break even. You get taken out, and then the trade goes on. What about that? What do the casinos do? If they pay a gambler, do they change the game? Do they add more cards? Do they do less cards? What do? They just play the game the same way. That's the only way to get edge, and that's the only way over time, assuming you vetted it so you know you have an edge, that you're going to extract dollars from the gamblers or the other participants who I perceive as gamblers, most of them. This is the process. This is the business of trading. So maybe trading is really, if we think of the business side of this, then we want to solve for operating in the environment. That's why I created TraderLab. Hope that resonates with you. And Doesn't mean you'll be successful, because you have to roll your sleeves up and go to work, and you're going to be frustrated like you always are. It's just a different way to frustrate yourself. The difference is you can codify processes and then measure them, so you know where you have an edge. And the other part of this is it isn't mechanical. So the same trades we take in one condition, we cannot take in a different condition. So it is a conditional process, and those conditions send you down a logical, like a schematic, a path. And there's like a tree, a logic tree. And then you make that for yourself. And all you do then is you adjust it to your psychology and time frame. Remember, I'm out of my trade here. And that's not a recommendation. I'm only out of it because I defined my plan, and I bring my plan to market, and I have no idea what's going to happen. So it's not my job to know. If I knew, believe me, I'd skip the trades where I take stops. But since I know I don't know, I've accepted that I have overhead and costs of production, just like every other business. I hope that makes some sense. Do I have a book? Well, I think I've got something better. In the TraderLab, I've shared a lot of my method. Plus, out in the interweb world there's a lot of information on auction market theory and volume profile. What I've done is I've broken it down into what I perceive to be usable. There's always theory, and then you got to apply it and use it. Well, there's a big gap between a concept and actually putting it into use. So what I've done is I've shared at least elements that have worked for me over the years, and the goal is to help traders learn how the market works, why it does what it does, and how to get in alignment with it. That's really the business. And then we're going to get out of alignment when the condition changes, and we're going to take stops. We all do. And we're only going to know in hindsight that the condition has changed. So we won't know. Suppose this is the high of the day. I'm not saying it is. How are we going to know it's the high of the day? We're not going to know until it starts breaking structure. But I also know the last trade I had long was down here, in this level. I have no more longs. I just have exit for me. And it doesn't say that we won't go somewhere up in the ozone. But I'm in new all-time highs, and I have nothing up here. So all I can do is use measure move. And I'll give you another target, but it's irrelevant. I truly mean it's irrelevant. In fact, we're almost up there. 64.26. I mean, we're pretty close to it. I have nothing above here other than helium. So this is really pretty much it for me. And because I have nothing up here, I have no auction, no levels that I can project. So then it's trailing stop or you're done. That's all I can tell you. Questions? So I don't have a book, but I'll tell you there's a community in the TraderLab, and there's enough information in there to keep you going for a long time. It's the community. Individual traders do research. We have other traders in there who create software for us. Data mining is taking place. We're all working together. It takes a lot of work to have edge. And a lot of this is already done. So all you really need to do is come to TraderLab. And I always suggest when traders come to TraderLab that this is not a business of give me 20 setups and now you're a whirling dervish. This is a business of one. If you can't do one, you'll do none. So when you're learning, think about being a master musician or playing a sport or speaking a foreign language. How do you start? That's what this is. How do you start? You need to develop, and you also need to understand that this business starts with discipline. You can't manage yourself, you will not be in the business. So you have to put a stake in the ground and say, I'm going to learn to become expert at one structured trade. And the one that happens most of the time is rotational trading, and that's this reversion trading. Most of the time the market will go directional and then will consolidate and rotate. That's most of the time. So that reversion can be used a couple different ways. It could be outside in, so it's rotations around a fair price, or if we're directional, reversion can be continuation long. So only outside in longs, outside in longs. So reversion is really a primary trading process. And if you can learn reversion, it gives you a lot of opportunity and a lot of opportunity so you can extract metrics because it's happening all the time, every day. And then that can become your trade. And if you can develop one trade and develop the discipline to execute it, then you move on and develop more and more and more. And I've shared all these in TraderLab. So it's not, you don't need a lot. What you need is edge. So you can become a profitable trader with one trade. It doesn't mean it'll show up once. It could show up 5, 6, 7, 8 times a day, but it's one specific trade type if that condition exists throughout the day. If that condition changes, then that trade would no longer qualify. Then you wouldn't have a trade. You'd sit back and you'd wait. But if you have an edge, you can become a profitable trader if you have an edge and develop the ability to understand the market mechanics when it's qualified, which is conditional statements, and the discipline just to take that trade and not play a video game. That's the business. You want to learn the business, you can learn it in TraderLab. But you still have to do the work, and there's no plug and play. I know we'd all like plug and play, and you guys have probably gone to a million gurus and chat rooms and influencers, and you know what I'm talking about. How's that working out for you? Well, if it's not working out for you, then I'm going to suggest you take the experience and maybe not keep doing it. Because I can tell you right now, TraderLab, it's not plug and play. It is education, and then you modify it to fit your psychology. Some traders are going to be long, and they're going to be in a Barca lounger, just letting this thing roll. Other traders are going to be flat and done. Other traders are going to be looking to micro trade. Get long here, go there. Me, not so much, because I need range. But if this was out here somewhere because of the rotations, I could be taking what's called mean reversion longs. And when I was mentioning you, mean reversion is the most common element. What are you seeing happen right here? Outside in. This is mean reversion. But where's the outside? That's the mean part of the reversion. Let me show it to you. I might as well show it to you while we're here. Now, this is not a trade anybody ought to take. I'm just showing you structure. Because I don't know. I'm clueless, right? Wasn't this resistance? And I break above it. Off I go. There's resistance. So this is resistance becomes support, right? And I have and so I break above it. This is important. This is resistance. That's important. I come outside. Didn't come back here, so I don't have a trade here. If it came out here, I'd be going there. That's a reversion trade. Didn't get here. Okay? So outside to there, and then to there, or through it. This is mean reversion. So mean reversion is outside in, outside in, outside in. Now, even this is reversion. So here we're looking for this, no bueno. This is my microstructure right there. No way to know. Break high. Okay. This is the reversion. If I pull out here, this is my support. Now, here's the problem with reversion. Now you can't take this trade because this is your target. Okay. The reversion is to the mean. And in this fractal, this is the mean. So if you bought it here, you can't. But let's just assume there was 10 points. Because the auction is generic, the behavior. We need the range for risk reward. So if you took along here, that's your resistance. If you took this long here, you would take a stop. Don't forget, it's not out here. This is a trigger. Where's my support? It's there. Where are we going? There. You see how it works? So this is the reversion. And reversion trading is difficult. Everything is difficult because of randomness. So what is the difference between getting long there to there and getting long and getting taken out And then you have to put it back on again because you have another trigger. There's a long to there. You see? So this is what reversion trading is. Now this is really where I would get long if it was me, because I have to have the range. So the context is up. How do I participate in a uptrend? I can only do what's called continuation trades. And those are not buy here. They're buy out here to come back there. So I'm trading. Oh, it's on sale. Retail, higher, resistance. Okay. So it's outside in. Breakaway, outside in. Too high, too low. And the too low is really this area here. So this didn't quite get there. Now, if you're very adept at this, you could be trading this. I always suggest for developing traders, you just wait for the location. And if it doesn't show up, you got nothing to do. You're just working on your crochet. That's the real world of trading, not chasing the market around. You will not stay in business. But in TraderLab, you would actually know what you will do when it shows up, not what the market will do. I hope that makes sense. Does that make some sense? By the way, no, I don't have a book, but I'll tell you, the thing is that I've read probably just about all the books. I've stopped reading them because they don't teach you how to trade. They give you ideas, but I've never learned to trade out of a book. And I've read tons of them, and I gave them away because didn't for me. I mean, there's a lot of material out there, and some of it's valuable. But you have to vet ideas. The thing is, even what I do, you may not be able to do it, but you have to find your groove. It's very much like speaking a language or learning to dance or playing a musical instrument. You got to find what speaks to you. It's that rhythm. And at some point, we want to get out of a mechanical process because we start out in anything incompetent. Then we become conscious. You remember everybody, now this is a poor analogy, but remember when you learned how to count? Didn't you get the concept? Then did you count on your fingers? Maybe I shouldn't disclose this. You count on your fingers. Then you're no longer counting. So you're incompetent. Then you become somewhat competent, consciously competent, counting on your fingers, and then at some point unconsciously competent. So we're all incompetent. Even though, by the way, you have random winners, you're incompetent. You just don't know it. That's part of the problem of randomness. And that's just an opinion. I'm not saying you individually. I'm just saying is we are and we don't know it. Random winners are what gamblers have. Anybody can have winners. You remember, you can have winning trades if you just had a random buy-sell button and you didn't even know. You're still going to have winning trades. That ought to tell you something. The reason your software packages that you buy have 200 indicators in them is they all have random winners. Why do we have 200? Well, if they're all random and you can't quantify an edge, then you're just going to have more of the same, random winners. But if you don't have an edge, over time, the dollars are going to go out of your account into somebody who does have an edge. So if you're interested in the business of trading, I'm going to suggest use the link in the bottom of YouTube, visit TraderLab. Also, this stream will be available to review for you guys over the weekend. Please give a like. Hope you got something from today. Visit the TraderLab. There is no cost, and it might help you on your way. And TraderLab, I'll be in there to visit with you for a few minutes, and then I have to get back to it. But again, thanks for visiting TraderLab, everybody. Please give a like on the way out. Appreciate your time and interest. If you're interested in the business of trading, visit the TraderLab. It'll be a great place for you to visit on your journey. Thanks again, guys, and have a super weekend.